Hello and welcome to Business on the Wire. India's fourth recession since independence, the first since liberalization, and perhaps the worst to date is here. Crystal said that a few days back as it predicted the economy to shrink by 5% in the current financial year because of the COVID-19 lockdown. So what is a recession and what does it look and feel like? A recession occurs when there's a significant dip in economic activity. Basically, individuals and businesses spend far less money. The technical confirmation of a recession is 2 consecutive quarters of a fall in the GDP or the gross domestic product. That's basically a sum of the value of all the goods and services being produced in an economy. Bear in mind, India has seen its GDP slipping for 8 consecutive quarters now. So the damage had begun well before COVID. So then, what are the red flags for a recession? GDP, as I mentioned, is generally a very strong barometer of how bad things are going to get. And the estimates at this point are pretty awful. Crystal believes the first quarter, that's April to June 2020, will suffer a staggering 25% contraction and the economy will contract by 5% in FY21. More worrying estimates from SBI's Soumyakanti Ghosh, who says, "We now believe that Q1's GDP loss will be," and I quote, "humongous and could even exceed 40%. SBI's Ghosh also expects a full year contraction of close to 7%. Goldman Sachs forecasts a 45% contraction in the first quarter and a 5% drop in real GDP for the full year. More importantly, how does the recession affect you and your life as an individual? Number 1, job losses, salary cuts, and uncertain professional future. This is being discussed more widely since the COVID lockdown happened, but unemployment and job losses have been a lingering problem for India for many quarters now. CMI, that tracks this data, points to a staggering rate of 23.48% in May, followed by a 23.5% tick in April. What's going on is that businesses are cutting down their headcount or they just aren't hiring anymore. Part-time, work from home, 3-month furloughs, it's something we're all seeing happening around us and probably experiencing firsthand. In fact, unemployment is actually considered an almost perfect indicator of recessions. Number 2, you're now a careful spender. Confidence in the economy is reflected in confidence in your job, but also your lifestyle. The better off people are, the more stable their future is, the more they're likely to go out and spend, the more they're likely to consume. Job losses have also hit millennials and the generation after quite hard, and they don't have a very deep well of savings to dip into. So decisions about buying vehicles, luxury items, clothes and other things were struggling, and now they'll be hit, of course. But one part of the economy that actually stood strong through the last couple of quarters was travel and entertainment. In a recession, eating out or traveling on holidays, taking flights will all be a carefully considered decision rather than a necessity. Number 3, lending and borrowing gets tougher. In the last 2 years, a good marker is the demonetization event onwards. It got increasingly difficult for small businesses or MSMEs to borrow money from the bank. Banks were struggling with loans going bad and they were hesitant to lend. The spillover was seen in spaces like real estate, non-banking financial companies were hurting, and money generally has been tight. My sense is the next few quarters will shine more of a light on the individual retail loans, both in terms of whether people are capable of making those EMI payments on time and how many people actually seek to take loans. Is all of this going away in a hurry? The truth is, no one knows. And it keeps coming back to the point that a vaccine will lead the next turn of events. But a few questions to think about. 1. Why weren't the rapidly rising unemployment numbers acknowledged by the government, and why wasn't the unemployment situation treated as an emergency many quarters back? Question 2. The number one challenge for an economy in times of recession is a complete slump in consumption. And the only way to boost consumption, especially in the lower economic strata, is to put cash directly in the hands of people. Why is the government hesitating to do that? Number 3, the central government has asked all employers to pay wages to workers in the lockdown period till the 18th of May. But from where are the small enterprises expected to cough up these salaries when they have made no money of their own. Recessions are tough. They also hit younger people much harder. It's time for the younger generations to think hard about what it is that they want from their government and systems in times of crisis.